Good morning, one and all, and welcome to this morning's video. So I have three pairs on watch this morning, and those are Sugar USD, Pound CAD, and Pound Swiss. So my favorite of the bunch at this moment in time is Sugar USD. If we just zoom out, we can see here, we just look at this on the daily chart, we can see that we have, I don't know why that's moved, but that seems to be happening a lot with TradingView at the minute. So on the higher time frames, we can see on the daily chart, we have broken just above this area. Okay, we have a daily high there. Okay, we can see it to some extent on the weekly as well, but we can see that kind of evening star formation potentially forming now. But we have broken above a higher time frame area of liquidity. Okay, caught people the wrong side of the market who thought this was going to the moon. Okay, and you can see we're well and truly back below this now. And what I also like is trading back below this as well at this moment in time. Okay, and potentially, as I said, we have that evening star formation there. I also like the fact we have the near miss here to some extent. Okay, so you can see the break above there. We even kind of had the evening star formation here. Okay, we have the move up, stall in price, and then the close, which closes crucially back below here, confirming that this was, this was price was not getting long. Okay, what I also like about this daily close here is it's a heavy bodied candle. Okay, so we have the bearish candle with almost no wick below it. We have a wick to the upside suggesting a washout of liquidity. Then we break to the downside, we get the impulse correction, and now we've got the follow through to the downside. Okay, you can see that we've had momentum on the 4 hour. We've broken below all of these wicks now. We're trading back below all these highs, okay, at this moment in time. Okay, you can see if we just zoom down. So we're trading below all of this now. And now I'm just looking for little inflection points as to where price might pull back to. Okay, well, we can see that we have, it's a little bit difficult to see on sugar, but we kind of have this, and we have this little inflection point there, which just happens to sort of be the back end of the retest of all of that. So we have this structure here. Price drops out, okay, and then we have this little running channel here. So what I'm anticipating, I don't necessarily know exactly where it's going to pull back, if it is going to pull back, but you can see that little inflection point there, just where price started to consolidate before it started to push lower, and that's often where price will gravitate back towards. So what I'll be looking for from this pair today is I'm looking for price to correct. I'm looking for a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. And then I would drop down to the 15-minute chart. I would filter this on the 15-minute chart, and I'd be looking for entries. I wouldn't actually be looking for entries on the break, because my rules state that when we're, the third correction in, okay, that I only look for risk entries within the structure. I spoke about this yesterday. So we've kind of had one correction here, push down, we kind of have a second, third. So if this was to form, depending on how you viewed this would at least be, even if you viewed this as one correction, okay, this is a separate one. This would be the third correction, and my rules state that when it's the third correction from an area of value, that I only look for the risk entry within the structure and not a reduced risk entry, as you'll usually see me looking for on the break. And the reason for that is very simple. It's because the further that we get into the run, the more corrections that we get into a run, the more likely it is that if we get something like this, price could form something a little bit larger, which perhaps mimics the depth of, I've just literally just seen this on the fly, that would mimic the depth of this to some reason, to some extent on the left. Okay, so prices are often giving us symmetry. So what does that mean? Well, what that means is, just take that one off. Okay, if we were to get something like that and I was to get short on the break, that means that it would be harder for me, let's take that off for a second, that one there. It would be harder for me to manage this, okay, if price pulled back up and did something like that. Whereas if we got what I just showed you a second ago, so if we got that and price did that, then I'd already be running at maybe about 3. Even if it pulled back from there, I'd be running at 2.5% profit before that actually happened, which would allow me to get my risk off of the table, move it to break even. Okay, so that is the simple reasoning, the simple logic behind looking for a risk entry within the structure and not a reduced risk entry on the break when it's the third correction in. Okay, so for that reason, what I've got there, you can see we have that last 1 hour candle. This market is closed at the minute. Sugar. Okay, I'm looking for price to pull up just to see if it pulls back up into this sort of area to give us that structure. And if it doesn't, if it just keeps selling off, then I'm not going to FOMO into the position. I know exactly what I'm looking for, and I know what I'm not looking for. Okay, so we've got the alert set there. So that is Sugar USD, pound CAD. So pound CAD, you can see here. So if we zoom out, partly why this is lower down the list is because we have a near miss here to this high. Okay, we know that these near misses often get filled. Okay, but it doesn't mean to say they get filled straight away, especially when we've broken above. You can see this. This is a higher time frame liquidity point. Okay, we came down, price came down, we scooped back up, broke above, caught people the wrong side of the market who believed this was going to the moon, and then we've had this confirmed evening star formation here, which has closed back below here, giving me a clue that even if we were to take out this high, which this high near missed too, we would likely get after this confirmation, we would likely get a move down to there to tap into this little area of consolidation here, which just so happens to be the retest to the back end of that, which would give us this structure, so a 1, 2, 3 there, okay, and then we would likely reject from that area, consolidate afterwards, and then push back up to take out that high which this high near missed too, which would give us this, okay, which would be a parallel piece of structure. Okay, so that's the market is always giving us these fractal patterns. So that's how I'm seeing it at this moment in time. And thinking about it, looking at this again, I actually prefer this to some extent over Sugar USD. But so we've pushed down. Okay, so we've had the evening star formation there. Once again, heavy body daily close, bit of a wick below it. That might, that's likely why we're consolidating to some extent. Okay, so you can see we're pulling up there. So we've had the impulse down, heavy bodied candle, which broke below the base of all of this. So you can see where this consolidation started there. Okay, we had all this consolidation. The base of it was there. Okay, and we've broken below and consolidated. So price will often pull back to the base of the consolidation, which you can see it appears to be doing now. To some extent, it's a bit of we have that kind of left shoulder, head, right shoulder. The right shoulder is higher than the left, so that's the tick in the box. Okay, that's usually what happens if we're going to move to the downside. Bit of a shallow head and shoulders pattern here. So price is not responded from this high. Okay, so we got to this area. You can see we've tapped into it multiple times now. So what I'm looking for, especially, I mean, given the size of this overall move down, what I'm looking for, even if it forms just above that, I'm not too bothered. The point being is that most of this correction is below. So what I'm looking for is, in this instance, I would look for an entry on the break, depending on how large this correction is by the time it's complete. It's clearly not developed yet. Okay, I would consider an entry on the break, but the larger, you can see my forecast here, this is pulled back slightly more deeply. So if it pulls back too deeply and the correction becomes too large, then I would not look for the reduced risk entry on the break. I would only look for the risk entry within it. But until such times as that has been invalidated, so what I'm looking for is that kind of structure there where we get that 1, 2, 3. Okay, more developed structure where I can actually see the parts. And then if we get the rejection there, I've looked to get short either within it or on the break, depending on how this forms. But it's clearly undeveloped at the minute. What's the last 4-hour candle close? Yeah, so we've had a little bit of momentum there on the 4-hour chart. So I wouldn't be surprised if this does just does just develop something like that, okay, and then push to the downside, but we shall see. So what I've got in this instance is, if we just look at this, let's have a look at this on the 5-minute chart. Yeah, so we've kind of, we near missed to that high, so that could have been the high of the structure, but we've kind of tapped into that multiple times now and broken above. So I'm just going to let price do its thing, okay. So what I've got is I've got an alert set there, set below price, just to see if we push back down and then give us that structure. And if this doesn't form, then and it just just consolidates as it has. There's no real structure to this; it's just consolidation. So I'm just going to let price do its thing. And if this doesn't form, then it's all good. That's fine. So that is pound CAD and pound Swiss. Yeah, so just to touch on it as well, on the management side of things, with Sugar USD, my target would be there because that was the base of all of this consolidation. You can see that this is why trading view don't fix that. We've kind of got all of this, and then you can kind of see that this is a separate piece of its own. So I would set a take profit there, and I at the 90% area. So I would set the I would actually set the take profit at that low there, okay, the 90% area, and then I would trail my stop loss accordingly for something in the region of 7 to 8%, okay, and the first target would be there. So pound CAD on the management side of things, if we got this, we would have potentially about 4% down to the low of that structure. It looks pretty similar, the structures that I just separate, but just because the profit potential is not so big on that one, I would be targeting these lows. And what I would do is I'd measure this range and then that low there, and you can see the consolidation just above. So in this instance, I would target the consolidation just above, something in the region of 7 to 8%, and then I would trail my stop loss accordingly at the same time. Okay, so that's the management side of pound CAD. So pound Swiss is a slightly different one. So pound Swiss, okay, we have a low here, which this low near missed too. Okay, the reason I've not got my ray line on there is because you can see that we've moved to the upside and we've consolidated, and we've not just consolidated, we've consolidated above this high. So if we get the consolidation, typically speaking, that is the market confirming that at this moment in time, it doesn't need to come all the way down to here to take out this low, which this low near missed too, before moving to the upside. Okay, so the consolidation is always the confirmation that we look for. And just to touch on it, we have broken below. You can see it to some extent on the weekly, but we've broken below this low and broken above it before consolidating. So price doesn't necessarily need to come here at this moment in time. And this consolidation was where price broke out of all of this. So there must have been a big exchange of liquidity here, and all this likely is people getting caught the wrong side of the market, who believed that what was previously support becomes resistance, it breaks to the downside, and then all those sellers get washed out. So what I'm seeing now is, because we've consolidated above this high here, that is suggesting to me that price did not find enough liquidity here to send it to the downside to take out this low, which this low near missed too, which would have given us that, which I'm sure I was looking at some point. You can feel free to check my previous videos, but this is what I was talking about, flipping my bias. So the market has given me a signal that it doesn't intend to take out this low, that this low near missed too at this moment in time, and that this is just consolidation to push higher. So is there any more clues to support that? Well, yes, if you can see we've had the 4-hour momentum to the downside. We also have a little consolidation here. We have a little consolidation here, which this near missed too. So I'm not surprised, because we near missed this area, that instead of getting this, and I was looking for longs here, and the reason I was looking for longs is because we had this low. This low was below this high, so it wasn't necessarily relevant. Okay, so I had my ray line plotted here for that reason, and I was anticipating that we might get a break below here, push back up in a flag where I could take this long, but instead price consolidated and then it dropped out, and that gave me a clue, the dropout. Okay, so when I was looking for entries here potentially to get long, but this was a two touch with no three touch structural approach, so higher risk. Okay, instead price just dropped down. As soon as it dropped down and consolidated, that gives me a clue that actually what we're doing is we're taking out this low, which this low near missed to give us more of this kind of structure, okay, which is parallel, and then we'll likely push up from there and flag to get long. Okay, and that's exactly what I'm going to be looking for today. Okay, so that's what I was talking about earlier in the week, about flipping your bias, being neutral enough. As I've said, trading is not about being right, it's about managing risk. Okay, and what I'm doing is I'm flipping my bias when the market shows me a different sign. Okay, I'm changing my sails when the wind changes direction. I'm not sailing in the same direction when the wind has changed direction, because all you're going to do is you're not going to go anywhere, you're not going to get anywhere, you're not sailing with the money flow index. Okay, and that's what we're trying to do as traders. So in this instance, what do we have here? We have an impulse correction continuation. Okay, and if we measure the legs there, we measure that from there to there, assume that the continuation leg out is of a similar length, that lines up with this. Okay, so if this is a completed move, which just so happens to complete here, where there was a sharp move down followed by a sharp move up, which price near missed to, that gives me a clue that that is likely where price will do something like this, push back up and flag. And if it did, if we tapped into the area of value and pushed back above the area of interest, of course this may not be ready until tomorrow, even if it's ready at all. I'll be looking for the push back up, the 1 hour impulse up, and then I'll be quite happy with a 5-minute continuation as a minimum. And I would look to get long either on the break or within it, depending on which of these flags it is. And then I will be able to manage it up to the top of this structure for around 4.5 to 5%. Okay, so we have the alert set just above this area of interest. Okay, and then my target in this instance, so what I would do is I would measure using the Fibonacci tool. I would measure from there. Okay, so the structure which this tight flag is within to the high of the structure there. And what do you know? We have that little high there, that little area of consolidation right at the 90% area, where price would likely pull back steeply, even if it does continue to take out that high, because that's where we get things like, we get up into that area, we get the sharp pullback, we may get something like this, and then we end up with a reversal structure like that. And I don't want to sit through all of that potentially. So what I would do is I would set the take profit there for something in the region of, what's that, 15%, and then I will trail my stop loss at the same time. And you might be thinking, if you're new to my videos, you might be thinking, well, why have you got this last on the list when the profit potential is greater on this one, or profit potential of how you're intending to manage it is greater? As I said at the start of the video, we are risk managers. We are not, our main focus is not, the profit. The main focus is how easily can you manage the position. The profit happens as a side effect of you managing your positions and managing your risk correctly. So that is some food for thought, and I hope you've enjoyed this video. That is pound Swiss, and I will be back tomorrow with another video, most likely, if I take any positions, if any of these actually shape up. As I said, there's been very, very little entries this year. Certainly any that I've certainly ones that I've any that I've learned to see, but I don't care about that. I'm not interested in how many entries there is or isn't, or has been or hasn't been. All I'm interested in is, can I manage my risk, and waiting for what I've been taught to look for to shape up. And if it doesn't, it doesn't. I'm absolutely fine with that. So that is the 3 pairs that I haven't watched today. Thanks for watching, folks. Hope you've enjoyed this video, and I will see you again in the next one. Thanks for watching.